Hello, my dear students. Today we are going to continue depreciation from our chapter Income from Business or Profession. So let's start. Here is an example. ABC Company Limited has four assets depreciable at 25%. As on 1st April 2019, the value of these assets as per income tax record is 1 lakh rupees. So 1 lakh is the value of the asset, and during 1920 they have purchased another asset. Its depreciation is 25% itself, and it is purchased on 1st June 2019, and it is purchased for 50,000 rupees, and an existing asset has been sold for rupees 25,000 rupees. So this is the quick question, and we are asked to calculate depreciation as per income tax rules. So first of all, we need to look that what is the written down value or value of that particular asset. So in case of opening balance, the written down value of that particular asset is 1 lakh rupees, and they have purchased asset for 50,000 rupees, and it also has same depreciation value, means depreciation rate, okay, and it is 50,000 rupees. So we should add 1 lakh rupees, that is written down value of the asset, plus the amount of additional asset purchased 50,000 rupees, and we will be getting 1 lakh 50,000 rupees. And sales 25,000 rupees. The company has sold asset for 25,000 rupees, so we should deduct that amount. So then we will be getting 1 lakh 25,000 rupees, and from that we should deduct the depreciation. In this case, all the asset is depreciable at the value of 25 percentage. The amount will be 1 lakh 25,000 into 25 percentage, and it is 31,250. And returned on value on 31 March 2020 will be 93,750 rupees. So here we are taking the written down value of that particular asset, and we are adding the amount of purchased as amount purchased for the company, and its amount is 50,000. So we will be getting 1 lakh 50,000, and after that we are deducting the amount of asset which we have sold, it is 25,000, and we will be getting 1 lakh 25,000 rupees. From this 1 lakh 25,000 rupees, we are deducting the depreciation. Okay, because all of this asset is valued under same depreciation rate, that is 25 percentage. So 31,250 will be the depreciation for the whole assets, and after deducting it we will be getting the written down value for the next year. And increased rate of depreciation for certain assets, rule 5 subsection 2. Here a machinery or plant is installed or produced for or using technical know-how developed in a laboratory, which is owned by government or which is financed by government or university, public sector company, secretary and the Department of Scientific and Industrial Research, Government of India. If they are financing or they are supporting for these type of research activities or these type of plant and machinery for producing or manufacturing the articles which is used for the development of our nation or anything like that, the depreciation rate will be 40 percentage. And here are some additional depreciation. In case of additional depreciation, if a new machinery and plant has been installed, which is after installed 31st March 2005, and it is the assessee is engaged in business of manufacture or production of any article which is related to generation of power or distribution of power, then there will be additional depreciation. And in same case, 2013 to 2014, at that financial year, we have discussed it previously that this generation and distribution of power is concerned under the topic straight line method, and all other is written down value method. By 2013 2014, it has been changed, which means now generation and distribution of power is depreciated under written down value method. And 17 and 18, the same is also allowed the associate engaged in the business of transmission of power, And one additional thing is that, which we have already discussed, that additional depreciation will be provided 50% if it is used less than 180 days, and the remaining will be provided, or depreciation can be claimed in next year. Okay, these are the additional depreciation conditions. And there is one more other condition which is related to this plant and machinery. In case of we are purchasing new plant and machinery, there will be an additional depreciation of 20% if it is used for the whole year. And if it is not used for whole year, which means it is used less than 180 days, then the depreciation amount, not amount, depreciation rate will be 10%. And this point is not in your textbook, so you should note down it. Okay, so this is about additional depreciation. Now we are going to do a problem. Written down value of block of plant and machinery on 1st April 2019 was 6 lakh rupees. So for a block of machinery, its depreciation value, so not depreciation, written down value is 6 lakh rupees, and they have purchased depreciation, sorry, they have purchased and plant and machinery for 2 lakh rupees for the previous year. Okay, date is not mentioned, but it is mentioned as previous year. Okay, so we can take it as a full year. And a piece of machinery whose written down value on 1st April 2019 was sold on 15/9 2019 for 80,000 rupees, and we are asked to calculate the return down value method. So here they have written down value of the plant and machinery as 6 lakh rupees, they have purchased for 2 lakh, and they have sold the machinery for 80,000 rupees. So first of all we want to find the whole depreciation, and we want to provide additional depreciation. So 6 lakh 6 lakh plus 2 lakh, 8 lakh will be the total value of that particular block of asset, and from that we want to deduct the amount of say sold machinery, that is 80,000 rupees, then we will be getting 7 lakh 20,000 rupees. On the 7 lakh 20,000 rupees, we should find depreciation. So 7 lakh 20,000 into 15 percentage will be 1 lakh 8,000 rupees. And we need to deduct that depreciation amount, that is 1 lakh 8,000 rupees should be deducted from 7 lakh 20,000 rupees, and we will be getting 6 lakh 12,000 rupees. And the other point is about additional depreciation, which I have told you. That is, if you are buying a new plant and machinery, which can be used for power generation, manufacture, production, any article, anything. If we are purchasing or purchasing an additional plant and machinery, then we will be able to charge additional depreciation, and it is allowed at 20 percentage if it is used for whole year. Otherwise it will not be 20 percentage, it will be 10 percentage. And there are some conditions also, I will share that conditions to you. In this case the question satisfy the conditions. Okay, because the main condition is that this additional depreciation is allowable if it is done before, sorry, after 31st March 2015. So that condition is satisfied. Other condition I will be sending you. Okay, you need to ask me for that. Then depreciation 20 lakh rupees. The depreciation amount is 20%. Rate is 20 percentage because it is mentioned as in the previous year they have acquired. So we are assuming that they have acquired before September 30th. So, and this is another question. In this question, a firm owned and used the following fixed asset in its business for the assessment year 2020-21. Factory building written down value for the year 2019 was 8 lakh rupees, and additions during the year was 1 lakh rupees, and the rate of depreciation is 10 percentage, and it is completed on this additional year completed on 1st January 2020, and furniture and fittings returned on value for 2019 was 1 lakh rupees, and its rate of depreciation is 10 percentage, and we are asked to calculate the total amount of depreciation. So moving to the answer, we need to provide the heading computation of depreciation for the assessment year 2020-21. First case, the written down value of factory is dealing. So block 1, Return down value of factory building on 1st April 2019, it is 8 lakh given in our question. An addition has been made, so we should add that addition of 1 lakh rupees, and the total return down value for the building for the assessment year will be 9 lakh rupees. That is 8 lakh plus additional 1 lakh, 9 lakh rupees. And after that we need to provide depreciation. So providing depreciation, 10 percentage depreciation is charged on 8 lakh rupees because it is previous year's asset. So 8 lakh, 10 percentage of 8 lakh will be 80,000 rupees. And in our question it is mentioned that the addition has been made on 1st January 2020. So it is made after 30th September. So we are allowed to give half depreciation only. We cannot claim for full depreciation. So half depreciation will be 5% as its full depreciation is 10%. So 5% into 1 lakh rupees will be getting 5,000 rupees. So total depreciation for first block will be 85,000 rupees. If we want to find the return down value for 2020-21, we need to deduct 85,000 rupees from 9 lakh rupees. And in second case, it is dealing with furniture and fittings. Furniture and fittings return down value is 1 lakh mentioned in our question, and the depreciation is at 10%. It is also given out in our question. So 1 lakh into 10% will be getting 10,000 rupees. So the depreciation value is 10,000 rupees. So for finding the return down value for the assessment year 2020-21, we need to deduct 10,000 from 1 lakh and we will be getting 90,000 as return down value of furniture and fitting for the assessment year 2020-21. For finding the depreciation, we have find 10,000 rupees, and for finding the total depreciation for both block 1 and block 2 assets, we need to add the depreciation for both. So 85,000 is the depreciation of block 1 and 10,000 is the depreciation for block 2. So combining both, we will be getting 95,000 rupees. That is the total depreciation for the assessment year 2020-21. So by this, we are concluding our class. Thank you.